Hello. This presentation is one we put together to talk about growing the company, explaining the development of Oriole in the context of the most used industry valuation models, and having explained that, give an overview of the investment opportunity provided by Oriole. We have our usual disclaimer. So within Oriole, we have a number of projects, all at a comparatively early stage. Most advanced is our Senala gold project in Senegal, where we have IAMGOLD spending up to $8 million to earn 70%. Then we have Bibimi and Wapuzi, the gold projects in northern Cameroon. Bibimi, we obviously just completed our maiden drilling program, and Wapuzi is slightly behind that, but very much in the same district. And then we have our newly acquired Central Cameroonian licenses, where we have multiple opportunities for success in district scale land packages. We've got a lot of resources around the group, and this presentation is to show Oriole's asset in the context of an industry standard theoretical model. Which is the Lassonde Curve. This was invented by Pierre Lassonde back in the 1990s, and we mentioned it briefly in the recent Fireside Chat video. But it's worth delving a little bit more into it. And basically, on the horizontal scale, it takes a project, and it's a project level model through exploration, evaluation, construction, and into production. And obviously when you get to production, then the value of the project starts coming away as you deplete the asset. On the vertical side is value, and this is an approximation of share price effectively. So this is showing what should happen to the value of a share in an asset as it moves from exploration all the way through to production. And as you can see, it's quite an unusual looking shape in that you have this first hump at the evaluation stage, and this is an iterative process as a project moves to sort of initial resource, extended resources, moves through the PFS stage, the PEA stage, and on up to feasibility study. So it's really increasing the value of the project through defining the resource that is eventually going to get mined. And that obviously is at Oriole, this is the part of the curve that we're most interested in. And then we move beyond that into the next part, which is moving towards mine building. And it's actually quite an unusual looking curve at this point, because you've got this sort of decrease in share value all the way down to commissioning, and then back up the other side once commissioning starts to mine production. And really underlying this are two main factors. We're talking about share price, but really you've got market value of the project and number of shares in issue, effectively. That's what would be driving share price on this. And using those two parameters, we can sort of reverse engineer the Lassonde curve to give us an idea of what's actually going on to give us this quite unusual shape. So this is the project value curve, which is actually it's a sort of flatter version of the Lassonde curve, and it's based on a theoretical project. So I've just constructed this from a theoretical project, which would be 1 million ounces of gold, 150 million pound mine build, a £1,300 gold price, and an all-in sustaining cost of 60%. And building that gives this project value line, which is driven really by two main facts. And two main facts are, on day one, when nobody spent anything, this project's worth nothing. But on the first day of mining, it's actually at its utmost value. At the end of mine, first day of mining, all the costs of getting there have been spent, and all you've got left is the mining of the resource. And times 1 million ounces by 1,300 gold price and an all-in sustaining cost of 60%, you get 520 million sterling value of the mine on day one. So, that's really the top point of the curve, and then everything else can kind of flow into that a little bit. I mean, it's pretty simplistic, because I'm ignoring things like discounted cash flows, I'm ignoring tax, expansion of the resource, changes in gold price, just really for simplicity of illustrating the model. Now, we have built a little fat into this because, as I mentioned, we have an all-in sustaining cost of 60%. Now, that would work out in this model at £780 per ounce of gold, and the actual industry average at the moment is more like £700 per ounce of gold. So, we've built a little bit of fat in to reflect the fact it's a simplistic model. But at a macro level, I think it kind of works to illustrate what's going on with the project value. And the point of that is really that we've gone from 0 to 520 million. Now, as an explorer, and as I'm sure many of our investors would like, unfortunately, this isn't a straight line between 0 and 520 million. There's quite a lot going on in this curve. To do that, there's two main things that have happened, really. Speculative investors have come in and backed a junior explorer to go and find a resource and prove an economic case for that resource. And then basically they've handed over to a financier group or a major gold miner to build the mine, basically. And this is why you have this sort of fall off in value. The speculative investors have found this resource, it's 1 million ounces of resource. They know it's worth 520 million. They might have a good idea that mine construction cost is going to be 150 million, for example. And initially, the speculative, they'll be thinking, well, this resource should be worth, therefore, sort of 300 million. Obviously, that won't happen. The financiers are going to want to make a profit on it. So you can't drive the value of the project, all the way to 300 million, but you get a significant uplift in the value of the project as you move through that evaluation curve. And this is what's known as the orphan period in the project. The speculators want to get out, and the financiers are not quite ready to get in. So the share price, will drift a bit until effectively what happens is the financiers and competition amongst them to build this mine will firm up a price, and the speculators will get out at that point. Once the finance is sorted, construction can begin. And as you can see from the steepness of that curve, pretty much every million spent is going to be driving value of about 2 million, just based on this theoretical model. So moving through, this is actually the numbers I used to generate that graph. And being an early stage explorer, I concentrate on the early stage exploration side. So we've got four phases of that, and then a phase of resource definition up to PFS and FS. And the numbers we've used are basically just assumptions around how much money are we going to need to do each of the phases, how much value are we going to create at each phase, using a £1 share price, how much capital is going to be required, because we need to understand how many shares are going to be issued in building this thing. And then the key number, obviously, is when on day one of the mine, it's theoretically worth 520 million. And as you can see, the number of shares that get issued, the share price has two major drivers: defining the resource, where the share price will rise substantially, and then getting to the mine development. And effectively, what you get is, in this example, 7 million shares, 12 million of capital needed to get to feasibility study, 7.7 million shares, at about £1.56 per share average, whereas the construction cost of 150 million will be provided by 14 million shares at an average of £10 per share. So effectively, the speculators who've taken all the risk of defining this resource are going to get a multi-X return on the investment. And the financiers who are taking significantly less risk will still also get a pretty good return because they're sort of driving the building of the mine. So, and in many ways, you can argue about any of these costs quite easily. It doesn't really matter in some ways. If you accept that this 1 million ounces of gold is going to be worth 520 on the first day of the mine, and you accept the shape of the curve, then you're arguing about, should that be 1 million, should that be 2 million? It doesn't really matter. It's a model that fits the Lassonde Curve effectively, and Lassonde Curve's been pretty well proven through its history. So this little graph just basically takes all those numbers and puts the project value, which we already looked at, against the Lassonde Curve that's being driven by those numbers of shares that I talked about. And as you can see, they're pretty much the same shape, but the Lassonde Curve, especially in the exploration phase or the evaluation phase, is much more pronounced. The value being added during that phase compared to the number of shares in issue drives significant value growth for the shareholders. Yeah, so what does this mean for Oriole? Well, all our projects are in that first quarter of the Lassonde Curve, the exploration stage. And what we're doing is moving them systematically towards the evaluation stage and proving successfully initial resources on those projects and pushing them further up the curve will naturally see an uplift in value through that evaluation phase. And potentially a pretty significant uplift in valuation as well. Interestingly, I've also superimposed our recent share prices. I think this is our 3-year share price. And bizarrely, if it looks like the first half of the Lassonde Curve, but it isn't. It's all it really is our projects are still in that exploration phase. So later on we'll talk about what that share prices graph is meaning, but it might look like the Lassonde Curve, but it isn't a Lassonde Curve effectively. So moving on through the projects. Senala is the project that is at its latest stage, its most advanced stage. It's 472.5 square kilometers in the KK inlier in Senegal, and currently subject to an earn-in by IAMGOLD, who are spending 8 million to earn 70%. We've got 5 targets on this license, and we recently secured it for another 10 years. So, we got a big license in what is a very hot district for gold exploration. There's an estimated 45 million ounces of gold across the KK inlier. And we've got a very good central position on it. Now, once IAMGOLD reach that 70% ownership position, we'll actually have a 25.5% holding, with our local partner holding 4.5%. We've then got the potential to sort of contribute or dilute, and if we contribute, we'll probably get the opportunity to contribute our partner's share as well. So we can start building back up to a 30% stake in this. And it's got 5 targets on the license. Fare is the most advanced, and IAMGOLD have recently been drilling at Fare and at Medina Bafe, which is in the south of the license and very close to their Boto mine development. So Fare, taking a look at Fare and not want to get into the geology too much, we've got a plan and a cross section of Fare here. We've had when we worked this ground before we passed it over to IAMGOLD or JV'd with IAMGOLD, we had significant intersections here, 100 meters of good grade. And this cross section here is sort of a good example of what we could do there in terms of a standalone open pit resource at Fare. We're currently awaiting results from the recent drilling, and the more information we get on Fare, the closer we get towards edging it into a sort of initial resource estimate and moving it into that second phase of the Lassonde Curve. And what that would actually mean for us, if Fare this is just, pushing the ownership structure of Fare into that theoretical 1 million ounces that we used on the Lassonde Curve example. If we push the ownership structure in, by PFS stage, Fare could be worth kind of 30 to 40 million pounds to us, if it had 1 million ounces. And we would there also have the opportunity to keep going. And, if we got it, if we went all the way and maintained our stake to mine build, based on that exact same theoretical resource, it would be worth, 100 million sterling. So Fare itself is a very interesting asset for the company. And there's 4 other targets on the Senala license that, have all got potential. And it, it's such a hot gold district that, you don't actually need 1 million ounces here, we don't think, to end up mining it, because there's so many mines and mine development projects around that Medina Bafi being a case in point, so close to Boto that, a few 100,000 ounces would be chuckable and get you there. So there's great potential for resource definition at Fare, driving value for the company. And flipping over to Cameroon, we've got the Bibimi and Wapuzi licenses. Bibimi is the most advanced of them, which has finished a maiden drilling program. We've got 8 kilometers of anomalous gold and 4 key targets, forming targets, which all drill tested during the drilling program, and all came back with gold as well. So, 4 good follow-up targets. Wapuzi itself, which is a similar system, a bit earlier stage exploration. We've really only done soil sampling, a little bit of trenching up at Wapuzi, but it's only 20 kilometers away. So you see the potential for bringing these together into a sort of shared position, maybe an open pit and a satellite deposit, something like that. And the potential of it is probably illustrated best by what we found in the maiden drilling program at the Gassy Zone 1, where the most obvious and immediate area we want to do some follow-up work on is highlighted in red on this map, on this plan map, and it's between 2 fence lines, 800 meters apart, good intersections, good grades across the fence lines, open to the north and south, and open at depth. So, we really want to get back in there and do some more work to start pushing this forward as quickly as we can towards sort of a maiden resource in our northern Cameroonian licenses. And then the third route to significant value uplift would be our central Cameroonian licenses, which we had confirmed in February this year. Nearly 3,600 square kilometres, which we know from historical data is prospective for gold. And this was further confirmed when we had our first trip to them and found artisanal miners working on them. Which proves there's gold there. It's very well positioned on the Chilani-Banya Shia zone, and we consider it to be a great district scale play. We're waiting for stream sediment results coming through from the 5 easternmost licenses. But in terms of scale, I mean, this area is about half the size of that KK inlier in Senegal we talked about earlier. That's got a gold endowment of 45 million ounces. So we've got half the size of it here. Plenty of potential for, a sort of 1 million ounce deposit to be in our central Cameroonian license package. And obviously, we talked about the Lassonde Curve as a sort of predictor of value, the way it should work as we move through resource definition, and then at a project level, and anything you look at online, this is a lovely smooth curve. When you apply it to looking what's going on in the real world, you get it very much distorted. The smooth line disappears behind AIM company trading patterns, this kind of sawtooth of the share price. other things can impact it, like resource iterations, which is, vitally important. It's likely that, the first resource anyone announces on a license will then get added to, more work will be done. They'll, if it's open to the north, they'll do more extensional drilling and push the resource up. And that can be, perfectly illustrated by Lassonde Resources, which have had multiple resource iterations at their project. They're very much still in the resource definition phase, but as you can see, every time they up the resource, share price rises and pushes up nicely, and they're just building carefully through that resource definition phase to the top of the first peak of the Lassonde Curve. Then you have multi-project companies, of course. Oriole's a multi-project company. Another one would be Oriole Resources, a mine operator in Turkey, but also with exploration targets. No prizes for guessing when they announce a new resource on a new exploration license. Significant uplift in value. Maybe not quite as pronounced as you can see from Lassonde's low point to their high point, but that's because they've already got an operational mine in there. And the point of that is, a multi-project company has effectively got 2, 3, or 4 Lassonde curves running at all the same time, and you might have certain projects in the orphan period and certain projects going through the evaluation period. So it can be a little bit of a mishmash of forces at play on the share price. And the impact of the trading patterns on the nice clean curves of the Lassonde curve is very much illustrated by our own share price. This is a graph I put up earlier, but I've repositioned the Oriole share price graph into where we are in terms of the Lassonde curve. Where theoretically in this exploration side, where it's a slow, gradual value build, our share price has had a pretty wild ride. But the point of this graph is really, compared to what would be expected, should we be moving through resource, extensional resource, PFS, PEA, feasibility study. These are pretty minor fluctuations in the context of the bigger picture. And that's, clearly what we're working to achieve. So the investment opportunity, what it all means is fairly self-explanatory. We're going to move through the evaluation phase, aiming to drive significant uplift as we have successful projects. And we've got multiple opportunities for that to happen. We've got 10 licenses in Cameroon, covering a significant land package, plenty of evidence of gold across all of them. And then we've got the Senala license in Senegal, where Faare is close to resource definition. And it seems to me that Faare and Senala largely underpin the 10 million market cap we have at the moment. And that's before we even talk about the other assets we have in Turkey and East Africa. And one of the keys to it is having an experienced team who understand the importance of systematic, results-driven exploration. We need to move quickly. Standing still definitely costs money. And we need to explore as quickly as we can, but it needs to be systematic and it needs to be results driven. And by doing that, we'll deliver shareholder value by delivering successful projects. And having an experienced team is absolutely vital. And I'm pleased to say that alongside me on the board, I have something like 100 years of geological experience, most of it in this type of industry, in this part of the industry. So we've, by having that experience and that team, we've got every opportunity for success, but also understanding the options available as we push the projects forward, which is very key. There are parts of the Lassonde Curve you'd want to get off, and being able to do so, is something that this board can bring due to their wide industry experience. So, I think we're pretty well placed for success and moving those projects along. So thank you for listening.